A friend recommended me to take a look at some of the smaller banks in Canada that they got really interested in, mainly Laurentian Bank. Laurentian Bank may be the 8th largest bank in Canada, but when compared to the big 5 banks in Canada, it's only a fraction of their size. The company hasn't been performing very well for the year. It started off the year poorly with an issue with some of their mortgages, not meeting the eligible requirements, and would need to buy them back, around $392 million worth in mortgages. They have resolved that issue, but this year the earnings just hasn't been meeting expectations and the stock has really been punished for that. Also during this time, they've been focusing less on residential mortgages and more into higher yielding commercial loans. But what's interesting is that its current price is yielding a 6% dividend return with only a 50% payout ratio. Before we take a look into the numbers, first as a disclaimer, I just want to say I'm not a financial advisor, so please do your own due diligence before investing. When we take a look at the chart, Laurentian Bank has just been performing terribly, just an abysmal return over a period of 20 years. Again, when we look at the annualized return, Laurentian Bank has been just a terrible investment when compared to the other banks, and Canadian Western Bank has some volatile stock movements as well, which we see reflected on the annualized return. But at these prices, Laurentian Bank has dropped a significant amount and has made new 52-week lows. For the time being, I don't see the dividend being in jeopardy, and with the amazing 6% yield, and with it trading below book value as well, may be an interesting investment. Canadian Western Bank has also dropped quite a bit this year, but at its current yield, it's not quite as interesting as Laurentian Bank. There is no comparison when we compare the revenue of the smaller banks to the big banks, but when we take a closer look, we can see that they are growing the revenue ever so slowly. Again, when we look at their yearly profits, we have to isolate the smaller banks by themselves again, and we can see that they are growing slowly again. One positive note is that Laurentian Bank has been paying and growing the dividends over the decades without any dividend cuts, but we can also notice that the dividend growth has been slowing down the recent couple years. From the chart, Canadian Western Bank has also grown their dividends over the decades nicely as well. We can see this more clearly from the table. The dividend growth from Laurentian Bank has been the least impressive compared to the rest, but hopefully if they're able to pull it together, we'll be able to see that 5% dividend growth again. Canadian Western Bank has been growing the dividend much closer to the rate as the other big banks, and if we can see a much further pullback, I would consider taking a look at them again. But currently, what do I think of Laurentian Bank? Is it a good buy at these levels? It's definitely got me interested at these levels with the stock trading at below book value, and may be a worthwhile long-term investment. They have gotten through the residential mortgage situation, and they are currently switching their focus from residential mortgage loans to commercial loans, which doesn't just happen overnight. It will take some time to see the results and if that was the right decision for them. Another reason why I like Laurentian Bank is that most of the residential mortgage are from Quebec, with only about 1/4 residential mortgage from Toronto and Vancouver. And with the rapid growth in the Canadian housing market, it continues to be a concern, but most of those insane housing prices are located in Toronto and Vancouver. On top of that, as the Canadian Central Bank continues to raise interest rate, the probability for consumer default increases, which is why we have seen a pullback in a lot of the Canadian banks. But I may take a very small position for a long-term hold and continue collecting that high 6% dividend yield and waiting it out. But I definitely wouldn't want to take a big position, as I much prefer the big banks more, as they are much more stable. Even when you compare the revenue growth and the dividend growth, the big banks has been performing much better. And as always, if you enjoyed the video, please like and share the video. It really helps out the channel. And if you haven't subscribed yet, make sure to smash the subscribe button. And thank you for watching. I'll see you guys in the next video.